Should you sell shares or assets when you are selling a business? In this video, I'll be going over whether you should sell your shares of your business or the assets of your business, and when it might be right for you to sell the shares and when it might be right for you to sell the assets of your business. So when you come to sell your business or you decide to sell your business, there's a decision that you have to make as to whether you're going to sell the stock, the actual shares of the business, or are you going to be selling the assets. Now, in some cases, you can only sell the assets. For example, if you're a self-employed person who's not trading as a corporation, the only thing you can do is actually to sell your assets. Maybe you're in a partnership, and in that way, you can only sell your assets. The partnership, for example, if you're in the UK, you'd only be able to sell the assets. However, if you have a corporation, then you have the choice of selling the assets or selling the shares. Now, this is the question that comes about sometimes when you're looking to sell. Why? Because buyers generally want to buy assets where sellers generally want to sell shares. So there's this particular reason for why each party would want to do each thing. The simple reason is that when you're selling your business, if you have a corporation and you're selling the shares of your business, there are normally advantages for you to sell the entire stock. 100% of the shares to the buyer is handed over on completion. And the reason for that is multifold. Normally there are some tax benefits, which is the number one reason why you should sell your shares if you are selling a business, is the tax benefits which are that normally come with selling the stock of your business. Now, whether in the UK or in the US or Canada, there are different, of course, rules when it comes down to that. But in the UK, it's called business disposal relief or asset disposal relief. And what that does is that reduces the taxation for the first £1 million of your business sale. And that's at the time of recording the video, of course. I remember about 4 years ago, it was on the first 10 million. So, rules are always changing when it comes down to taxation. Always speak to a tax advisor who is fully qualified and knows the up-to-date information regarding selling a business. So that's what you should be looking at when you are want to sell your business. So selling your business, you really want to sell your shares if you can. Now, sometimes you might want to sell the assets even if you are a corporation. So it might arise, for example, that, let's say you set up a new division in your business that you wanted to launch a new product or launch a new service, and for some reason, either it didn't go to plan or you just decided to, okay, that's fine, I set this up. I did have something, maybe I've got some employees, I've got some assets there. We are generating some revenue, but you wanted to refocus back onto your core operations. You just might want to, completely dispose of this whole department, this whole division. You'll sell all of the assets of that division and then you can continue with your core business. You won't be selling the entire stock of your business, of course. You'll just be selling the division itself. For example, private equity, they do a lot of that when they are, maybe they've acquired a business and they don't really like it too much and they've merged it with another business. They would want to just sell the assets of the business to get it off their balance sheet. And that actually does, have some benefits on accounting purposes if they do that. But generally, if you're watching this video, then you're probably a small business owner, medium-sized business owner who wants to completely exit the business, and selling the shares is going to be the right thing to do. Selling the assets, again, could be the right option for you if you want to sell a division or if you are self-employed or in a partnership and you can only sell the assets itself. Regarding when you're selling the assets, it's like double taxation. So that's why when you're selling assets, you really need to look at how that's going to impact you when you are selling and what that income is going to be. When you're selling assets, that becomes income for the company. And then, let's say, for example, you sell a bunch of assets for $1 million. Then that $1 million comes into the company. It's taxed according as income. Then you have double taxation because you have to pay corporation tax on that. And if you want to extract the money, then you have to pay dividend tax. So that's why when you're looking to sell the assets, there is certain disadvantages. For example, let's say you want to sell the entire stock of your business, or you want to sell your entire business and you agree to do an asset sale. what ends up happening is that you're left with the corporation. So once all of that income comes in, you would end up taking it out, paying the corporation tax, taking it out through dividend and everything, but you still got this legal entity there in which you need to dispose of. So you need to then wind that business up, and then that costs some money as well. That's why sellers generally like to sell their shares. Buyers like to buy assets because they're only buying the assets, the parts that they actually want from the business. The other thing when you're selling your business, if you're selling your shares, what happens is that you sell all of the liabilities with it. So whether it's the good, the bad, everything gets sold. There's only a few things that can come back to you. For example, of course, if some fraud has gone on or something like that in the business, and that's directly you frauded maybe the tax man, the IRS, HMRC, then that's going to come back to you because you sign warranties to say that you haven't, or you've paid your taxes, basically. That can come back to you for up to 7 years. That you can't get away with. Whether you're selling the shares of the business, whether you're selling the assets, can come back to you. So you really need to be careful as to what warranties you're getting into. You can't really get out of the taxation warranties. You have to sign those because essentially, if you're refusing to sign tax warranties, that's alarm bells for the buyer. Like, why don't you want to sign these? Have you been defrauding the tax man? And of course, that can come back to the buyer when they're going to operate the business. So for you, when you're selling the shares, 99% of you are good people that are watching this video. You're operating your businesses in good faith and making sure that you're paying your taxes. So you want to sell the shares to ensure that you just completely wash your hands off the business and nothing comes back to you. So I hope that answers the question whether you should sell shares or sell the assets of the business. And if you want to find out more, of course, I've got a bunch of links in the description in which you can use those tools. Or if you want to work with me directly, you can do that too. So best of luck with your business exit.